Mohit Jhangir is now with us, founder investinghut.com. Thank you so much, Mohit, for taking out time for us. What do you make of this move coming into the market, this sort of sudden change in terms of stance of how to look at mid-cap, small-cap valuations? What do you make of it?
Yeah, thanks for inviting me to the show. So I'm optimistic on the markets for the longer run. While there might be some volatility in the near term, I remain optimistic on the growth story of India because of multiple triggers. So a fall of this magnitude is giving opportunities to the investors who stay stock specific, who are staying in good quality companies. So this is what I feel about the markets. And as far as the correction in small cap and mid cap names is concerned, I think it is a very good time to pick strong franchisees across the small cap board. So the companies which are having that reinvestment mode, they generate consistent cash flows, that there is honest governance in those businesses. So for an example, if we take Borosil Limited, so where the promoter is holding majority of the stake, more than 70%, and due to COVID, they faced bad times. But now, while we can see that the consumer spending is increasing, so that their business is also doing well. So it is the best time to invest in strong franchisees at reasonable valuations, so that you will have that margin of safety, as well as you will generate good alpha as well.
So which type of companies should you invest? Should one go with FMCG, IT, which have a steady business, or should one look at cyclical names like steel, cement, which can tend to benefit if there is a recovery in the economy?
So as far as cyclicals are concerned, I think they are very much correlated with the economic activities. So while economy and markets move in cycles, there are phases where we see expansion, we see slowdowns, then recessions, again recovery. So market and economy will always move in phases. So it is very important to understand whether we are at the bottom of that cycle where the market is about to recover, or we are near to the top of that cycle. So I think at this point of time, cyclicals may give you good returns if you are looking for 10 to 15% CAGR over next 3 to 4 years. But focusing on strong franchises which are non-cyclical in nature, they generate consistent cash flows over the longer period of times, will be preferred at this point of time. So as far as sectors are concerned, I'm very bullish on the companies which are focusing on clean energy sector. Then green hydrogen is the newest theme, the latest theme in the market, on which I'm fairly bullish. So companies like Reliance Industries, so in their last AGM, they announced that they are going to invest 75,000 crore in in setting up 4 gigafactories. So they will be the most integrated player in the clean energy as well as the green hydrogen theme. So I'm fairly bullish on Reliance Industries. It is a defensive stock, so it won't fall that much. But once it demerges its businesses, or if we see the potential of all the verticals of Reliance Industries, I feel it can be a good bet in renewables and green hydrogen theme. So my focus will remain on the companies which are under-owned and under-researched in micro-cap and small cap space. So companies like Epcotex, which is the only company in India which is manufacturing nitrile rubber as of now. So companies with honest governance, they can generate consistent cash flows over the longer period of time, and they are available at reasonable valuations as well.
Right, sir. So, companies available with reasonable valuation, but how would you look at the overvaluations that the companies have? So a lot of sectors, especially in this niche small cap, mid cap area that you were just talking about, have seen extreme re-rating. What does that, what is that level where you would be comfortable?
So see, even if we see today's market, we are observing that these stocks are correcting by at least 5 to 7%. So if we follow certain KPIs, key performance indicators, or in these companies, then we can get a better idea about the valuation. So not every company will be valued on PE, which is price to earnings. So we will have to look at what kind of growth the company has posted, what are the cash profits. So there is a very popular brand which is Red Tape. So there is a listed company called Mirza International. They are going to demerge Red Tape, the Indian business of Red Tape, from their company. So if you see, because they are expanding their reach through EPOs, so their depreciation is going high. While depreciation is a non-cash expense, so we will have to look at the cash profits. What are the cash flows which the company is generating? So for judging the valuations, we should look at different KPIs, not only price to earnings or price to sales. So I think there will be different KPIs for every company and sector.
Right, sir. Sir, just a word as far as what are the things that one should take a note of. You know, markets are falling, they are falling for a scare, they are falling for a reason. What are the global things that one should look forward to?
So, yeah, I think I've already discussed about the whole clean energy and clean hydrogen theme. So, if, in the clean energy sector, you should look at the companies which are engaged into the businesses related to solar energy. So I feel that PLI can be the next confidence booster for the Indian markets. In past, it was corporate tax cut. Before that, it was GST, which and we are seeing the results now of those reforms. So I think because of PLI, domestic capacity of manufacturing solar modules will increase. Earlier, the PLI, which was announced for solar modules, was at 4,500 crores, but because of the massive response to that PLI, it was increased to 24,000 crores after obtaining the approvals from the government. So even if you look at the past data, so in 2010, the global solar capacity was around 70 gigawatts, and now at the end of calendar year 2020, it is at around 724 gigawatts. So this is a massive 10 times rise. And now, if you see the cost of producing solar energy, that is way cheaper than the conventional sources such as coal and natural gas. So solar energy will be the one sector, and the companies which we should track are Reliance Industries, which will be the most integrated player, and we should track all the solar module component manufacturers. So there are companies which are manufacturing glass. There are companies which are into EVA, then solar inverters. So these companies will benefit in the green hydrogen because the cost of electrolyzers were very high. So this is why the cost viability was not there. But as companies like Reliance, Adani, they are entering into electrolyzer manufacturing. So I think they should be
Right,
the preferred.
Right, sir. Thank you. Right, sir. Thank you. Sir, thank you so much for taking out time for us. Good to get perspective from you. As we